Thanks. Fifth year Ripple's done it, fifth year I've done it. Welcome to everyone, developers, investors, students, entrepreneurs, representatives of institutions. Everybody, welcome. Thank you so much for coming. Super excited to be here. I've shown this slide at every single Apex. It shows that the XRP Ledger, the growth is real. It shows a shift and scale over more than 13 years. 3.3 billion transactions processed, 6 million plus active wallets, secured by more than 800 nodes and more than 180 independent validators. It's a proven track record of reliability and decentralization. So this is a shift that we're seeing. Institutions are moving from pilots into production. Yesterday, we had the announcement of digital commercial paper live on XRPL. Real assets are coming on-chain. Commercial paper, treasuries, money market funds, stablecoins. All of these things are happening today on the XRP Ledger. And this isn't box checking. This isn't another DeFi fad. This is a massive, massive opportunity. These institutions are adopting layer 1 blockchains because they see the advantages of the decentralization and the governance. These institutions will be innovation accelerators. They don't own the XRP Ledger. They don't want to run the XRP Ledger. They want to participate on an open blockchain. The trustworthy infrastructure brings more building blocks to more developers. The best example of this that we can all see clearly is stablecoins. There is not a more institutional product than stablecoins in existence. They're launched by institutions. Their direct customers are institutions. But we've seen billions of dollars of DeFi impact from these stablecoins. These stablecoins are used for collateral, for payment, for loans, in trustless ecosystems on public layer 1s. Institutional products provide the tools for developers to build on top. And the XRP Ledger is evolving to support these real institutional financial use cases without losing its core values. The whole point is to provide tools that will enable the next wave of retail mass adoption DeFi. Joining me on stage is Jazzi Cooper, RippleX's head of product, driving our institutional DeFi vision. Jazzi?
Thanks, David. It's true, we're at a turning point. Public chains were once seen as too risky for institutions, and now it's too risky for institutions not to integrate them with their business. Institutions have truly embraced blockchain and are finally launching real products on public chains, including the XRP Ledger. And XRPL is evolving to meet that demand. Over the past year, a number of key features have gone live, ranging from the automated market maker to decentralized identity, price oracles, and clawback. And we have others that are still in voting: credentials, MPTs, permission domains. These features are foundational infrastructure for building secure, transparent, and scalable financial products. And we're not just modernizing finance. We're making it more inclusive, accessible, and programmable. And we're finally seeing real traction. XRPL is supporting real-world applications ranging from payments to yield generation, all decentralized and at scale. Let's take a look at what this growth looks like on-chain. David?
I've shown this slide at every Apex, twice at this one, apparently. But the momentum is real. This shows how the XRP Ledger has scaled for more than 13 years. 3.3 billion transactions processed, more than 6 million active wallets, secured by more than 800 nodes, more than 180 independent validators. This is a proven track record of reliability and decentralization. But I think you'll notice there's one thing on there that hasn't been on there before. There's something new on this slide. Jazzi?
Institutional adoption. It's here and now measurable on-chain. XRPL has finally broken into the top 10 chains for real-world assets, with nearly 120 million RWAs live on-chain today. Some examples include money market funds issued by Archax, treasuries issued by OpenEden, and now DCP by Guggenheim, the first digital commercial paper on the XRPL. Stablecoins as well. There's RLUSD by Ripple, USDB issued by Braza Bank, as well as legacy tokens like USD GateHub and USD Bitstamp. These aren't experiments. They're live, regulated financial products on the blockchain, and the pipeline ahead continues to be strong. DLD, the Dubai Land Authority, issuing their trust, Ondo's OUSG token, SocGen's Euro stablecoin. So now we'll take a look at why the XRPL. What makes it uniquely suited for these financial applications?
You know, I hear that a lot. What makes the XRP Ledger different? What is the XRP Ledger's purpose? Well, it was built for a purpose. Many blockchains were built for different purposes. Bitcoin, the first blockchain, designed to be digital scarcity, a store of value, a means of exchange. What can you do with the Bitcoin blockchain? You can hold and transfer Bitcoin. That's useful, but that's about all it does. Ethereum went completely in the opposite direction with smart contracts and open-ended programmability. It kind of made an app store approach for blockchain where you can build and launch your own applications from the ground up on the blockchain. The XRP Ledger carves a niche in the middle. It was designed in 2012 specifically for financial applications, focusing first on payments. The architecture prioritizes speed and reliability, low-cost transactions and predictable transaction costs, and seamless enterprise-grade integration. It wasn't trying to do everything, but it was focused on targeting real-world financial use cases exceptionally well. So what are those real-world financial use cases? Well, it built that core set of financial functions like issuing assets, sending and receiving payments, trading via DEX, credit origination, all at the protocol level. So there was no need for added layers, no need for developing smart contracts, none of the risks or costs associated with smart contracts. With fewer moving parts, fewer risks, and better performance, it was easier for developers. What did that look like? Finality of around 4 or 5 seconds, fees way under a penny and predictable, and no protocol level breaches in more than 10 years. But beyond speed, the tools were significant as well. Built-in compliance tools like issuer controls, transfer restrictions, native aggregated liquidity through order books and now the AMM, growing cross-chain interoperability. Bottom line, institutions and retail developers get production-grade financial infrastructure, ready to integrate with simple APIs. They don't have to rebuild the stack.
To support institutional DeFi on the XRP Ledger, we're drilling into 4 primary verticals where we're looking to build new features, and together we believe these can serve as the rails for a new financial system. The first, the leftmost column, is tokenization, the bedrock of on-chain finance. You can't move, manage, or expand value on-chain without first bringing it there. So our goal here is to offer a variety of different token standards that can meet the requirements of nearly any asset class, whether that's real estate, currencies, or crypto-native assets. Multi-purpose tokens is one example of this. It's a new token standard that was purpose-built to support real-world assets, with support for metadata, access controls required for utility, and compliance. Trading is the second column here. Once you bring value on-chain, the ability to exchange it is table stakes. The XRPL has, of course, had a built-in order book-based DEX for over a decade, and now we're expanding upon that with features like the automated market making as well as the PermissionDEX. Payments, of course, is the bread and butter of the XRP Ledger, and there's support for everything from lightning-fast peer-to-peer payments with nearly instant settlement anywhere in the world to advanced features like cross-currency payments, payment channels, and programmable checks. These are built for real-world payment needs, and we see this use case finally really taking off today, particularly with stablecoins, which we'll talk more about shortly. Lending, finally, is the last column here. Credit, of course, is a cornerstone of the financial system, and it powers everything from daily spend to institutional growth. This is a core vertical that we need to solve for, and so we're adding a native lending protocol on XRPL that will support credit origination on-chain, as well as over-collateralized lending, starting with the EVM Sidechain and hopefully mainnet in the future as well. These are designed to meet both the needs of DeFi users as well as institutions that require risk and compliance.
All of these capabilities tie together to provide a strong developer foundation. Liquidity through built-in order books, auto-bridging across assets, and now the AMM. Native liquidity providing efficiency for payments, trading, and lending. Compliance built in at the protocol level with features like transfer restrictions, issuer controls, and trust lines. Institutions can meet their regulatory requirements right on a public layer 1 blockchain. Programming providing expanding capability, which we'll see soon. Preserving the efficient infrastructure, the low fees, the fast settlement, the reliable performance, and the simple APIs so teams can focus on the application, not the back-end complexity.
Let's zoom out a little bit and take a look at the broader market dynamics. DeFi today is about 120 billion TVL, primarily driven by crypto-native use cases like over-collateralized lending. This is innovative, no doubt, but it's niche. By 2033, we project to see 19 trillion in tokenized assets on the blockchain. That's serious institutional adoption. But even that compared to the $130 trillion global credit market. So the opportunity here is clear. It's not to take a small slice of the existing DeFi pie, but it's for us to expand the pie by building infrastructure to unify crypto innovation with real-world finance. Institutions can also benefit from monetizing their rails with increased transparency, speed, and efficiency, all of which blockchain offers.
These institutional assets will bring new sources of liquidity to the ecosystem, creating predictable flows and higher volume across the DEX. Developers will have access to high-quality collateral and enterprise tools, opening doors for new applications like tokenized lending markets, cross-border payment rails, and innovations we haven't even imagined yet. This is not a shift away from DeFi or the community. This is about expanding the toolkit, making the XRP Ledger more capable for everyone building on it.
So what are institutions actually looking to build on-chain today? There are 3 use cases I want to call out today that are rising to the top, and we're really leaning into them. The first is stablecoin-based payments. This shouldn't be a surprise. It's already live on XRPL today, both the feature set as well as actual applications that have volume. And these power compliant cross-border payments. The average cost today to send a $200 payment, for example, on traditional rails is about just over 6%. The cost to do this using stablecoins drops down to 0.5% to 3%. So it really just cuts the cost in half, and this is a no-brainer. Collateral management is the second use case we're seeing gain a lot of traction. Today, only a fraction of eligible assets are usable as collateral, and moving these assets is slow, expensive, and full of friction. Tokenization changes this entirely. On-chain collateral can move in real time, peer-to-peer, with full transparency and programmability. If we take a look at the scale of this opportunity, there's currently about $255 trillion worth of marketable securities worldwide, and only about 30 trillion of these are actively used as collateral. By bringing these onto the blockchain, adding liquidity, and reducing counterparty risk, the opportunity here is clear. Finally, trade finance. This is another big use case that continues to be growing on the blockchain. Right now, trade finance is slow, fragmented, and paper-heavy. Deals rely on physical documents, manual reconciliation. By tokenizing these documents using escrows and on-chain settlement, we can streamline this entire process. You can have real-time verification, automated payments, as well as reduce counterparty risk. This is where blockchain delivers immediate, measurable impact by cutting costs, shortening cycles, and unblocking working capital.
With these enterprise products on the chain, new use cases will open up for developers and the broader community in the retail DeFi space. With institutions bringing tokenized real estate, fractional ownership will be possible. Users will be able to have small portions of large real estate portfolios, bringing liquidity to traditional illiquid markets. Loyalty rewards could be used as digital assets, flexible, brand agnostic, things like airline credits and interoperable point systems. And all of this taking advantage of XRPL's core features with fast, low-cost payment, efficient settlement, whether it's real estate, rewards, NFTs, or social tokens. The big picture is institutional growth isn't closing doors to retail adoption or retail DeFi development. It's building the infrastructure that the entire ecosystem will use to innovate for future DeFi products. These are some of the features that Ripple is proposing and expecting in 2025, and we're going to dive deeper into some of these. I want to make the point that this is not just Ripple-led. Many of these features, like token escrow and batch transactions, come from community developers like Dennis at XRPL Labs. XRPL's development process is open. If an idea solves a real problem and the community supports it, it can get adopted. Toolkits of features are starting to come together. Simulate transaction with account permissions, more developer control, better user experience. Smart escrow, vaults, and the lending protocol provide the foundations for on-chain credit. The PermissionDEX with multi-purpose tokens enables compliant trading and programmable token behavior, like non-transferable tokens or gated access. No single feature is a silver bullet, but together they make the XRP Ledger composable, flexible, and powerful for building real-world financial applications. You're going to need to be able to combine them.
This is what's really special and exciting about our current approach to building new protocols like the PermissionDEX and lending protocol. It's modular. We're not building monolithic end-to-end protocols, but rather these are building blocks that are on the protocol layer, or you can think of them as money Legos, which can be pieced together in many different ways. This is how XRPL can become truly composable. Let's look at an example flow. If you start with an MPT token, for example, to create custom asset logic, say non-transferable or limited transferability tokens, you can deposit these into a single asset vault, and now you have programmable collateral or trust minimized lending. From there, you can leverage permission domains for compliant access control or keep the protocol entirely permissionless. The end result here is infrastructure that supports regular DeFi, institutional DeFi, or something new entirely. It's truly up to the developer.
PermissionDEX is a feature I'm personally very excited about. It builds on one of the XRP Ledger's core strengths, native payments and trading right at the protocol layer. The XRP Ledger's built-in DEX has always enabled seamless access exchange, but access has always been wide open. The PermissionDEX introduces more fine-grained controls over who can interact with what, based on credentials, jurisdictions, or other criteria. It's the same DEX infrastructure, but extended. It's not fragmented. It's not centralized. This unlocks new flexibility. You can issue unrestricted or constrained assets. You can have compliance rules, gated access, enterprise loyalty programs. It doesn't close off innovation, but expands what developers can build by letting them define asset behavior and market rules on their terms. Institutions can define permission domains on the XRP Ledger and set rules around who can interact with what. And this won't just be institutions interacting with other institutions. The rule to get into a permission domain might just be that you're not a terrorist. So all of you guys, well, probably not that guy, but all of you guys will be able to interact with these permission domains. There's no new infrastructure. Offers go to the native DEX, but they only execute if counterparties meet the domain rules. It's decentralized, compliance-friendly, adds control without adding fragmentation or centralized custody.
And one important point to highlight is this isn't a walled garden like we've seen attempted and failed in other instances. It's not a private chain or completely isolated DEX protocol. It's a gated section of the existing public decentralized exchange, which has tremendous advantages. For example, users that are eligible to participate both in the PermissionDEX as well as the primary open DEX can participate in both and arbitrage the two systems for financial gain, equalizing them and creating a more liquid market on both sides.
The PermissionDEX isn't a new system. It's built on the existing DEX with enhanced access controls. In this example, we see two offers, one inside a permission domain, one outside it. They could both be made by the same person. They could both use XRP as the source of liquidity. But when a trade is made, a sell placed by somebody within the domain, a buy offer from another verified participant can match it. But offers outside the domain are blocked. On Ledger, enforced by the XRP Ledger protocol, with no central gatekeeper required. This enables regulated marketplaces for trading real-world assets, supports compliant settlement for tokenized treasuries, stablecoins, or other real-world assets, unlocking global on-off ramps for regulated financial products, extending, not fragmenting, the native DEX.
This another protocol that I'm especially excited about is the lending protocol. This is a core pillar of institutional DeFi on the XRPL, the native lending protocol, which is purpose-built for compliant on-chain credit origination. If we want to support institutional activity on XRPL, we need to support a full stack of financial primitives. The XRP Ledger, as we discussed, already handles payments and trading at scale. But without a native credit capability, we're missing a core function of finance. And the lending protocol will fill this gap. It brings programmable, compliant credit origination directly onto the XRPL. So there's two core components of the native lending protocol. The first is single asset vaults, which aggregates assets and liquidity into a pool and distributes a share token to the liquidity providers. There's also the option for various compliance features, including freeze, clawback, and permission domains. On the other side is the lending protocol that plugs into the liquidity aggregated in a vault and allows for the origination of a fixed-term, interest-accruing loan to a borrower. There's also features built in for risk management, including borrower underwriting, as well as collateral held by a third-party custodian, for example. There's also a built-in first loss capital protection scheme as well for risk management. So why does this matter? Institutions now have a compliant framework for credit origination, and this allows for secure, efficient, and programmable lending, all on a public chain. Use cases range from decentralized access to credit against crypto assets, fintech lending, for example, where you can have better back office efficiency, faster access to capital. This is a major step forward towards real-world credit markets on the XRPL.
Programmability, of course, very important to me. XRP Ledger was built for simplicity, performance, and reliability, especially for finance. We have core features, tokens, escrows, DEX, AMM. They're efficient and secure. But developers want more flexibility. And that's why Ripple and the community are collaborating on native programmability to bring more customization to core protocol features. At first, that's going to probably be through extensions, things that let you enhance existing XRP Ledger features like escrows or AMMs. Think of it as making the native tools smarter without rebuilding them. Powered by a WASM-based virtual machine that is lightweight, efficient, and permissionless, it will keep the XRP Ledger's reliability and speed while enabling custom logic. Over the longer term, we're exploring full smart contract capability on the XRP Ledger with the community. The goal is to support both smart features for common needs and smart contracts for advanced use cases. The first smart feature that we're proposing is Smart Escrow. Many of you are probably familiar with the XRP Ledger's native escrow feature, used for time-based release of funds or conditional payments. But for more complex scenarios, we're introducing Smart Escrow, programmable escrows that can use WASM-based custom logic. This doesn't replace escrow. It's an extension of the existing feature with custom conditions. This can be used for things like notary escrow, where a third party commands the release of the escrow, credential-based escrow, the recipient has to have a credential or NFT, cascading escrows for multi-step transactions in fields like real estate, trustless swaps, option-style escrow, where the release is based on external data from a price oracle. This will expand on-chain programmability without compromising simplicity, keeping the performance and efficiency intact while unlocking new and richer business logic. Smart Escrow is just the beginning. Any XRP Ledger feature could become smart through this extensions framework. We're looking for community input on what to prioritize next and what new use cases this extension model can target. We want this to be an open and collaborative process with developers can start experimenting now.
Alongside native programmability, the EVM Sidechain is the other avenue for adding programmability to the XRPL ecosystem. XRPL's EVM Sidechain is on track to go live this quarter. Testing is underway with infrastructure partners to ensure it's secure, scalable, and production ready. Once live, full EVM compatibility will be available within the XRPL ecosystem. So why does this matter? Now, developers will have the ability to deploy Solidity-based smart contracts and their existing apps without having to rewrite their code. This unlocks XRP liquidity and now yield opportunities as well. And it also brings Ethereum-based tooling like MetaMask, Hardhat, and Remix all into the XRPL ecosystem. We're excited to announce a handful of early application partners confirmed for launch. Vertex, which will offer PermissionDEX, Strobe, which will offer a money market protocol, Squid for cross-chain bridging and swaps, and Secured for leveraged AMM and margin. What's neat about all these applications is they'll be accessible directly from your XRPL mainnet wallet without having to manually bridge because they're built cross-chain.
The XRP Ledger offers robust native features with more coming soon, built directly into the protocol layer with fewer dependencies and a cleaner architecture. Docs are live, tools are improving, the ecosystem is open. It's a great time to contribute. Developers are essential to reshaping what's coming next.
If you're exploring payments, credit, or digital assets, the XRPL is ready. Infrastructure is compliant, scalable, and production grade. And most importantly, you'll be building alongside a global open source community. This is how we shape the future of finance together. Thank you.
Thank you.